In today's video, we're going to explain why we got into Microsoft puts, why I'm bearish on tech in the overall market, and what needs to happen in the market for us to become bullish again. So without further ado, let's get started with the video. All right, so we're going to talk about reasons to be bearish. Number one, Microsoft. Microsoft is $1 trillion company. When it opens this far overextended outside of the upper level of the Bollinger Band, it is generally a very bearish sign, meaning because when we open outside of the upper standard deviation, which is the upper level of the Bollinger Band, that usually signifies very overextended to the upside conditions. So because we were like this, usually what ends up happening is when we have a candle like this, there is usually another day of downside to afterward. So it makes sense to swing Microsoft puts into the close. They were already up 20%. So I'm expecting a bit another downward move tomorrow on Microsoft. Number two, the NASDAQ. Clearly this setup does not look too bullish. We got a very big green candle yesterday, and today we reversed almost the entire candle and closed well below major fib levels within the candle. So this is not a bullish setup at all, especially with Microsoft being that overextended to the upside. One of the heavy hitters in the space is showing that there is very overextended to the upside. So if Microsoft and all of the other tech stocks were not overextended at all, this wouldn't be as terrible as a setup for the NASDAQ. But because things are very overextended to the upside, plus given the fact that this setup is not bullish at all, should lead to more downside, in my opinion, for tomorrow. I could be wrong, but if you're going to choose a direction for the night, you have to be bearish. This does not look like a bullish setup. Number three, take a look at the SPY. So the SPY also clearly does not look very bullish. We closed below this 411. So I was saying how 411 to 412 would be very, very important for us to maintain the upward momentum. And for example, right, we clearly had a very, very big green candle, right? For this momentum to comfortably continue up, we would have ideally wanted it to remain above 412, 413, get a bit of a pullback, cool, and then just continue up. All right. The fact that we breached below the 412 level, right, and then we closed below 411, that is not in line with upward momentum. So if you end up going long right here, you're hoping that buyers continue to step in at support, where the momentum of the direction currently the direction's momentum on the day, this is not a bullish chart. It should crack below. And if there is going to be a setup that cracks below this uptrend, it's going to be this setup, in my opinion. So I mean, if we're going to be short something, we're going to be short the safest thing to be short, which is an overextended Microsoft that's getting the love of every news outlet talking about ChatGPT. So yeah, I mean, it's easier to be short, and then especially if the market remains below 412, then this is just going to continue falling lower. This is not a bullish setup, and the SPY is another reason why we have to be a bit bearish. Next, the IWM does not look as weak. It doesn't look as strong as the NASDAQ or the SPY. Obviously, it looks way more bearish, and things have fallen much more. So we're very close to this trend line. And once again, this is not a heavily bullish setup. Usually what ends up happening with these sort of setups is if everything is pointed to a very big move to the downside, at least one day to the downside, right? So I'm not sure how much more follow through we're going to get, but this is not a bullish setup. We tried to make a reversal. So just pragmatically looking at the IWM right now, right? Biases aside. So let's just start Thursday. We made a top, cool. We fell the next day, makes sense, right? We fell the next day. We wanted to try to maintain support. And then we fell even further, made a red candle. And then Tuesday comes along, yesterday, right? We wick all the way down because of the Fed meeting and everything that was going on, and we bounce back above. So this was Tuesday was supposed to be a bullish setup. We were supposed to continue up, right? So like obviously a level that we would want to hold. So not even looking at today's candle, right? I can't really hide it. Anyway, just don't even look at today's candle. Looking at that green candle, ideally what you would have wanted to see was it not close below any major fib levels, right? This candle is supposed to be a bullish reversal. We wicked below major levels of support and then printed a very green candle. So the fact that we did not continue upwards today, or at least hold like a major candle body, for example, or any like major level of support on the IWM, is not a bullish thing. It is bearish. The only bullish thing about this setup is that we're close to the trend line, but excuse me, but immediately this is not a bullish setup. So that's another reason why. I mean, the market just doesn't look that, it doesn't scream bullishness to me. And then number 5, I would have to say, is the VIX. So the VIX, we are closing above this downtrend level on the VIX. We made a very big green candle, and obviously we know that the VIX has an inverse relationship to the market. So if the VIX is doing well, then the stock market should be falling. So basically we closed above this uptrend. What could end up happening is we come back, retest, and then continue up. So tomorrow in general, right? So this is the VIX, right? Now let's go ahead and take a look at the dollar. Now with all of these setups, right? So the dollar isn't an automatic, like overnight, it's going to look, first of all, we know that the dollar and the overall market has an inverse relationship as well. So if the dollar is doing well, then the market should be falling. Immediately, right? We can see that the dollar is technically holding support, right? But it wouldn't be uncharacteristic for a security or for the dollar in this example to fall a bit lower and then bounce from there, right? But sorry about that. But basically the dollar is going to, if the dollar goes up, then the market should fall. But this is a very, very bullish setup on the dollar. I mean, it's not, it's like too bullish for it to continue, in my opinion. Like it should, like it would make sense for it to have a bit of a pullback. So if it does have a pullback, then the market should have a bit of a bounce. So, I mean, I would be shocked if the dollar just continues up. I don't mind. But regardless, that's why, you know, we're short Microsoft, because Microsoft is already very, very overextended. This isn't the dollar as opposed to being short the SPY. The SPY could easily bounce, but Microsoft, given that it's already that overextended to the upside, it's much, much safer to short, in my opinion. And, you know, I was looking at all of this stuff as we were taking the swings, and like I didn't go short the SPY because of basically like how much more strength that we could potentially have. We could have ended up bouncing off the trend lines, the IWM, the SPY, the NASDAQ, they're all at technical trend lines, right? And the dollar is also very, very, very strong. It looks like there should be a bit of a pullback. But with all of these things, from like a risk reward standpoint for safety in terms of making money and trading, it made sense for me to just, you know, be short Microsoft. It gave the best risk reward, and so far it's working out really well. But yeah, I mean, the dollar doesn't look, it wouldn't be uncharacteristic for the dollar to get a bit of a pullback and then rip. Okay, because another thing is that the MACD is starting to cross above the 0 line. The slow MACD line is starting to cross above the 0 line. Once that happens on the dollar and on anything, it generally means that the overall momentum starts to shift bullish as well. It doesn't mean that it's going to happen overnight, and it doesn't mean that it's just going to continue the next day, right? It can stagnate it can fall, it can move, but overall the momentum is going to be up as long as this crosses above. So that's basically what's happening. And if the momentum on the dollar is going to be up, then the overall momentum on the stock market is going to end up pointing down because of the inverse relationship between the dollar and the market. So that is going to be pretty interesting to look at. So the dollar wasn't an entirely bearish thing. It technically does look strong, but next we have to take a look at the bonds. And the bonds, they broke below the lower level of the Bollinger Band, which is a very oversold condition, usually, right? Now, this isn't an automatic reason to be bullish because, all right, sorry, we know that the bonds and the market, they have a more correlated relationship. So if the bonds are doing well, then the overall market should be doing well also. But this is not an automatic reason to start being bullish on the market. It would be more bullish for the market if we end up getting a break and close above this prior zone and these prior resistance levels here. This in and of itself is not a reason to be bullish. We could always just end up bouncing back to these levels of resistance and fall lower. So you have to keep that in mind. But that if the bonds were like much more overextended to the downside, then I wouldn't feel as comfortable to be bearish, to be honest. Because usually when the bonds get overextended like this, it signals a bit of a bottom in the market and a bounce. But it doesn't, it usually crosses to the downside for more than one day at a time. So this was just the first day. Let's see if there's more room to the downside on the bonds. And we're going to have to see if that correlates into the market. And the other pretty important reason why it makes sense to be bearish is because of lumber. So we were looking at how lumber, when we start to break below major levels of support, and the SPY has not yet shown that weakness, but lumber has considerably shown a lot of weakness. That's usually a topping signal on the market. So what we've seen in the past was when lumber does something like this and it starts showing a lot of weakness way before the market does, then that's a topping signal for the market. So we need to see if that is also going to play out. That'd be pretty cool. But to be fair, we have to look at things that are somewhat bullish on the market, right? And the number one thing that I want to take a look at is Tesla. Tesla is continuing to show strength. So obviously the fact that Tesla is showing strength, it means that there's a lot more room to go to the upside, and it can help pull the market up. And the other thing that'll just automatically make all of this bearishness and everything go away is if on the SPY on tomorrow, if we end up getting a close above, so right now, pragmatically, this is a bearish setup. There's no ifs, ands, or buts about it, okay? But what they can end up doing, which I think would be really, really spectacular, is, so we're short. We already got Microsoft puts. We're up 20% on them. Whatever. But what would be really, really amazing for them to do is if they gap it up and they get a close above today's highs, and then everyone that got bearish late, right, they would be ripped to the upside, and then we would have another continuation day. And based off of this, if we end up breaking above this, then we could end up touching like 425. So tomorrow is going to be very, very important in my opinion. The only way that we would end up becoming bullish again is if we get a break and close above 414, 415 area. But I can't explain how exciting that would be. Is if we did get that, then it would be a day for lotto calls. That's basically it. If we get a close above 414, 415 tomorrow, in my opinion, we should get into lotto calls, because this would be a setup for a very, very parabolic move. And then if that doesn't work out and then it falls the next day, then we just have to play the chop properly. That's all it is. If there's going to be a chop, and they're going to play around with the direction of the market and not make it fluid, it is what it is. But we just have to take it one day at a time. And if you don't want to take any trade, the easiest trade would be to follow this trend line, draw it out from January 20th. And basically, if we get a close below this trend line, just get into basically, you know, lotto puts, and we should end up having another day of continuation. But of course, I'm not your financial advisor, and this is not financial advice. But yeah, guys, I hope you guys enjoyed today's video. That's really it. Make sure to like, comment, subscribe, do all that good stuff. I'll see you guys tomorrow. Thank you so much.